Hi there, welcome to Kneppyinvests. Bit of an ad hoc video today because I am in between two night shifts. And the main reason I want to do this video today is simply because what's been happening on the Australian market over the past 2 weeks. We have seen the Australian market fall off a cliff during that time period. And on the screen right now, I do have the daily XJO, which is the ASX 200. And if we go back to June 6th, it was above 7,200. Now it's 6,433. So the XJO has fallen by more than 10% in 2 weeks. Typically, when you see a significant sell-off in a very short period of time, you will eventually see a bit of a bounce. So I do expect a bounce today, which is the 21st of June. I am recording this video 30 minutes before trading will begin. So I do expect a bounce. The reasons I do expect a bounce is because the XJO and the XJO and the XSO are all oversold right now. But we also saw some positive action on overseas markets. Now, the American markets were closed on the Monday because of a public holiday. I think it was Juneteenth, which might be the first time they've celebrated Juneteenth as a public holiday. But we did see the European markets up overnight. So I do expect a good day on the Australian markets today. And I wouldn't be surprised to see that continue over the next few weeks. The question is how long that continues is going to be highly influenced by what happens on the American markets. Would not be surprised to see significant falls in the American markets from here, particularly if we keep seeing really bad economic news. So even though I have heard quite a few commentators talk about how good the economies are right now, I think the opposite is true. The economies are not that healthy right at this particular point in time. And what the commentators are focusing on is unemployment. Unemployment is pretty low right now. But when you look at consumer sentiment, when you look at inflation, the economies are not doing well. And that's why the markets are falling. That's why the markets are in downtrends. That's why the markets are in bear markets right now. And that is true for the XJO. We have seen the market fall significantly over the past 2 weeks, definitely has moved into a downtrend. And one of the reasons why the XJO, which is the ASX 200, has fallen off a cliff over the past 2 weeks is because of the banks. Now, one of the reasons why we have seen relative strength in the ASX compared to the American markets is because of the banks and because of the miners. They have held strong, relatively speaking. But the last 2 weeks, we have seen significant weakness in the banks. And I think what the market is saying is they don't think the banks will come out of this possible recession we might have healthy. And banks actually do suffer during recessions. They don't suffer when interest rates rise. So it's sort of two forces fighting each other. Rising interest rates is beneficial for banks, largely, not always, because you will see more distress in mortgage holders. But when we do move into recession, if we do move into recession, those stressed mortgages will probably increase. So I think what the market is saying over the past few weeks is they're not confident that the banks will come out of this period, this economic period, healthy. And that's why we have seen significant sell-off. So this is the Commonwealth Bank. And a few weeks ago, the Commonwealth Bank was well above 100. In fact, it reached about $108. Now it's at 88. So we have seen the Commonwealth Bank fall significantly in the past few weeks, particularly in the past week. And that's on higher volume as well. So I'm always looking at volume. And when you just see increasing volume, particularly as the share price moves down, that is actually a bearish sign. That means there is a lot of institutions selling out of their positions in Commonwealth Bank. Now, Commonwealth Bank is traditionally perceived as the strongest bank, and traditionally it is the highest value. So dividend yield 4.3%, price to earnings right now at 14.52, and that has fallen a fair bit. At one point in time, I think it was almost 20, and that is ridiculously high for a bank that is not growing all that much. Now, one of the most favoured banks has actually been NAB Australia. So the most favoured, or the second, third, and fourth most favoured banks, so we have the big four, sort of shifts around every now and again. And over the past about 5 to 10 years, NAB has been typically thought of as the fourth best bank or the weakest big four bank. But recently, it's been one of the most favoured banks among the big four. And we have seen the share price in a well-defined uptrend up until recently. And just like CBA, the share price of NAB has fallen a fair bit. In fact, it's fallen from a high of about $33.50 to a current share price of $26.06. The dividend yield there is 5.4% and a price to earnings ratio of 13.1. Now, I have bought banks in the past, the big four banks, and when I have bought the banks in the past, it's when the price to earnings ratio has been at historical lows. Maybe not historical lows, but well below the mean you usually do find for banks. So for instance, when I do see the price to earnings ratio of the banks fall below about 10 or even 9, that's when I might take a position. And that sort of trading strategy has worked pretty well for me in the past. But at this point in time, lots of negative sentiment in the banks, and the negative sentiment in the banks is one of the factors that is driving the Australian market down over the past 2 weeks. So let's go back to the XJO and looking at the daily. And one of the things I always like to do is not only look at the daily, but also look at the weekly and monthly to get different perspectives. So it does look fairly bearish once we look at the daily chart. But as we transition to looking at the weekly chart, we might have a different perspective. So I'm just going to zoom out a little bit more. And so here we are. We'll zoom out. And this is zooming all the way to about 2001, 2002. And you can see the top on the left-hand side, that is just before the GFC. And this parallel sloping upwards lines, orange lines, that is sort of a channel that the XJO has been trading in ever since 2009. And if we actually zoom a little bit in, the XJO has not traded outside of this range apart from one occasion, and that was during the COVID-19 financial panic. So the reason why I'm not really including that time was because we were panicking. The market was panicking at that point in time. But whenever the XJO gets to the top of this trading range, we do see some weakness coming into the market. And every single time the XJO gets to the bottom of this range, we see some strength in the overall market. And over the past few weeks, we have seen the XJO fall a fair bit, and it is moving towards the bottom of the range. And right now, the bottom of that range is at 6,200. So the question is, if we do hit 6,200, that would signify the bottom of the range and possible good buying for not only the market, but also companies within the market. The other thing I've got here, right down here, is this sloping blue line. That sloping blue line is the long-term trend. And we can't ignore the long-term trend because if we look at the monthly chart, the XJO actually fairly regularly, actually we'll get rid of the moving averages here just so we have less clutter. The XJO really, it's a really strong support level, that the upward sloping blue line. That is the long-term trend. I'm not using a log. This is just linear. If I show you the log, it's not as pretty. So if we go back to the linear, that long-term trend has not been broken ever since about 1982, which is when we started to see interest rates starting to fall. So this is about a 40-year, we have been in a 40-year bull market when it comes to bonds, which might be coming to an end now, I don't know. But the main thing here is if you follow this long-term trend, which is the blue line, we hit it during the GFC. So the bottom of the GFC hit that long-term trend. Not only did we see that long-term trend hit during the bottom of the GFC, and that was the buying opportunity, also during the COVID-19 financial panic. It hit there for a very brief period of time, right on 4,400. Now, the big mistake I made during the COVID-19 financial panic is my going all in position was 4,000. I was being a little bit conservative because of the fear in the market, but I really should have put it at 4,400. And it hit that 4,400 for a very brief period of time. That's why on that particular monthly tail candlestick, we have a fairly large tail to the downside. So that was confirmation that that long-term trend had held. And right now, the long-term trend is sitting at 4,600. Now, can we get to 4,600? Now, if we do move into a really bad recession, we might actually move towards that long-term trend. And I don't know if we are going to go to or move into that long-term, sort of that really bad recession. No one knows the future. And that's the main thing I have learned over the past, say, 10 to 20 years is don't listen to anyone who is trying to predict the future. We have seen the Reserve Bank in Australia make that mistake. Now, some will say that the Lowe did not forecast that interest rates won't rise to 2024. He actually said, and I might be paraphrasing here a little bit, if wages don't rise by 2024, or we expect wages to rise in 2024, and that's when we will see a rising interest rates. So they were suggesting that we wouldn't see rising interest rates until wages started to rise, but they did not expect the inflation we are seeing right now in the economy. So there's a lot to play right now. I would not be surprised to see the Australian index, the XJO, move towards 4,600 if we do go into a significant recession. And if we do go into a significant recession, the time to buy would be at peak pessimism. So right at the depths of that recession would be the time to go all in, and that could be when the XJO is moving towards 4,600. If we don't move into recession, or we start to see inflation really pull back, which would be a good sign, maybe the lowest we will see is the bottom of that trading range, which is about 6,200. And anywhere in between that, who knows? So the main thing here is the XJO is moving towards the bottom of that trading range, and the further it moves down, the greater opportunities are out there to take advantage of good, valued, high quality companies. And that's what I'm doing now. I'm developing watch lists of companies I want to own for the long term. And these are going to be high quality companies that I think can grow and will grow over the next 10 to 20 years. So that's really all I have for this particular video. I'm going to go take a bit of a sleep, prepare for my next night shift tonight. If you do have any questions about anything I've talked about in this particular video, if you disagree with anything I've had to say, I'd love to hear your opinion. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.